Right, if we just speak about investment, I mean, I don't think there's been a better time to be an African entrepreneur. If I look at the last week, I've seen probably 3 different announcements in terms of funding rounds. Orange have launched a 50 euro million fund. CC Hub are trying to bring startups to Africa to give them $20 million. So all the funding is there. The thing I'm kind of hearing a lot is that the opportunities aren't there. I mean, from an investor point of view, how do you see the current tech landscape in Africa in terms of investable businesses?
Will probably attract the ire of every entrepreneur in the room in a second, except everybody here. So we have a slightly different perspective in that we're growth investors. So we look for businesses that have sort of $4 or $5 million run rate revenue. And so that basically cuts out a lot of the very early stage businesses that you hear a lot about and in incubators and so forth. And for us, actually, it's you know we just don't see that many businesses punching through that level. So as I said, we have a global remit, and that's the reason partly why we tend to spend a lot of time in Brazil and India, because there it's more a question of timing. Basically, the entrepreneurial ecosystem there is just older. So it's been a longer time for entrepreneurs to to gestate, grow their businesses, and so there are just a lot more targets for us in those markets. But we've made an investment in sub-Saharan African business. We've looked at a lot, gotten to term sheet stage on a couple, and so there are businesses there. It's just not quite a scale that we'd like to see, but it's, as you said, improving every year.
And for the companies, how difficult is it to raise money in Africa?
I'd like to put a penny to my thoughts on that. We're currently going through what we're calling a pre-seed, and so we have five banking clients at the moment. So we feel as if the model is working. We've generated revenue, obviously. We've gone to the US to raise our first sort of significant round, and definitely offline. I'd be delighted to speak to people about who that is. But that's been an interesting process for us. And a lot of the feedback that we get from VCs who invest in this area is, we're too small, come back at Series A. And I think, to be fair, that is a fair enough thing to say. You come back at Series A, you've proven your business model, right? But the ecosystem still does need help with those early stages. The incubator model works reasonably well in the UK. Cambridge is very interesting. Cambridge Angels and everyone like that. But supporting those early stages possibly means that you get more of a flow of startup hitting Series A a little bit later. And that's where opportunities for partnership come in with big corporates like Barclays Textiles, for example, is a very good example.
How about the rest of you guys? How have you found the funding journey?
It's been interesting. We've raised about $24 million over the last 7 years, and what we've found is that getting financing from Africa has been a challenge, just because it's not cost effective for us, and so most of our financing has been raised in the US and in Canada. However, a key point is the fact that an idea alone in Africa is not going to attract investment. What a lot of the investors want to see is some traction, to see that you've actually got a case and that you can attract some customers before you even look to funding. And so we've gone through all of the types of funding that you can think about, from grant funding at the beginning, some of which is quite expensive in terms of administration and being derailed from your mission, to debt financing and to equity. Our last round was $50 million, which was led by the IFC. And it was the first time that we also took $1 million from an African private equity company called 4DI Capital. And so this has taken some time, and it has required that we constantly are proving that this is a viable business. And we're taking these lessons that we are learning and applying them to the entrepreneurs that we're supporting. Everything from providing them with support for reporting so that it's easier for us to track, because for a lot of our agents we finance them upfront, and so all of the lessons that we're learning we are transplanting into them so that they can start to attract bigger financing as they go as well.
Segun?
Yeah, funding. We've been going for 6 years now. We've been essentially self-funding. We haven't raised any money. We're probably looking to start to raise later on this year. We try to build a commercial model around sort of low capital startup, high margin, recurring revenue, and hopefully we can get the business to fund itself.
Yeah, so we've been around for about 4 years. We're now at sort of the Series A Part 2 sort of level. We've broken up our Series A round. Pre-Series A fundraising really wasn't too difficult for us, but now we're sort of getting the hard questions, the difficult questions. But I think one of the points that I sort of wanted to allude to is that obviously any entrepreneur knows, whether you're in tech, whether you're UK, Africa, is that your main goal in your first year of business is to survive your first year.
Yeah.
In your second year, your main goal is to survive your second year. And I think one of the things that let's say personally, I sort of care about a lot, especially in space in Africa, and again, especially on the technical front, is so many apps you hear about are just so, how do you say it, sort of transformational, in terms of the kind of thing, the challenges that they're covering. But I wish sometimes some investors just sort of realize that a little bit more, because you hear of so many incredible apps that are tackling so many big problems, because most Africans know that every day is a challenge. So the sort of the coping mechanisms that come with that, in terms of the apps that they're developing, are so ingenuitive. And I wish some investors sort of took that into consideration a little bit more, because any tech company around the world, especially those in the US, know that tech companies blow through cash very quickly. But that's not to say that they don't have viable businesses behind them. So I wish that financial investors who are looking at African businesses would sort of discount for that a little bit more, because there are incredible technical companies out there who I would hope would make attractive targets going down the line.
But do you think that the lack of exits, for investors right now, is holding back? InterSwitch is touted as being the first African real unicorn that they held back on floating last year. From an investor standpoint, your investors want to exit, and right now there is no real exits happening in the market, apart from trade sales.
Yeah, and we're very happy to take trade sales. Let me tell you that money is money. Show an IPO makes a great story for the front page of the Financial Times, but the vast majority of venture capital and private equity exits are M&A. But to more sort of broadly answer your question, what about the exits? That's probably the sort of number one question on the mind of every investor in any emerging markets, to be honest, because we've gone through the sort of the generation of, these markets are huge, fast-growing, young population, super well-connected. So the macro story is there, and people invested essentially off of the macro story, then into really some incredibly engaging and sort of thoughtful entrepreneurs. And we see a lot of those as well, so we can back those, but really, the end game has to play out, and the exits have to happen, because that's really how the cycle of venture and entrepreneurship survives, right? The company exits, the investors get their money back, the entrepreneur makes good money, and then he or she goes and starts the next business and funds 5 other businesses as well, and that flywheel has to actually sort of get to that exit point to make this thing viable for the long term.